This was the 1099B that was brought to our attention this morning to go over, and I know that Hal spent some time researching it and figuring it out and wanted to share that. So, Hal, it's all yours.
Okay, so it's typically really easy, except for kind of one thing. So when you get the 1099, and the one I'm looking at, it's all short-term gains or losses. So there's a summary page, and it says it's all box A stuff, and so it's got gross proceeds and it's got cost basis. And you've got about almost 120 pages of detail. You don't need to put all that detail in your tax return. All we do is we put in this case, Apex Clearing, short-term transactions, and we put in the total of the gross proceeds, and that's what the IRS computer will match, is the total of gross proceeds. And then normally we just put in the cost basis. Now, if like this one, you've got wash, sale, loss, disallowed, that's the complication that you've got to look at here, and you've got to adjust for. So let's talk for a minute about wash sales. So wash sales are defined as buying or selling a security at a loss when within the 30 days before the date of the sale and 30 days after the date of the sale, you've purchased that same security. So let me give an example. Let's assume that on November 30th, I sell Bank of America at a loss. But I'd also purchased other Bank of America stock the 30 days before that and within the 30 days after that. If I've got a gain, there's no impact. But if I've got a loss on that sale on November 30th, then I get what's called a wash sale, and it's disallowed. And what happens is that loss is you have to apply it to basis in the other stock that you've bought. And normally this isn't a big deal because most people aren't buying and selling back and forth like what we've done with Cool Trade. And so it's just a matter of taking what that loss is. Typically most people might have one other purchase, and you take that loss and you add it to your basis of the other one. Here it's a little bit more difficult because typically we've got lots of buys and sells of the same stock. Now, one thing that isn't in the reading that I've done on this, but from my opinion is if chances are you've sold the stock that you bought again. And so what I do is I wouldn't worry about the wash sales throughout the year. I'd only worry about the wash sales in the last 60 days of the year. And I'd look at those, and I'd look to see if I've got a loss that's created a wash sale, how long have I held the stock that triggered the disallowance of that wash sale? I got a dry throat, and I'm just drinking some water here. Because most of the time I've probably turned around and sold that stock anyway, and so it doesn't really matter, and I just increase the basis on that. But you've got to be careful of a loss on any stock in the last 60 days of the year where you've got a wash sale situation. And looking at this Apex thing, they've marked the ones that are wash sales. And in the one I'm looking at, their losses are more than what their gains were, and so instead of getting a overall loss, this person's having to claim a bunch of gain, and they're limited on their losses. But I think if they went through and identified those wash sales for the end of the year, then they probably wouldn't have the gain, or they probably have enough of those losses they could go ahead and take back because they've sold additional ones that they've got the added basis to. So that's your complication. It's going to mean going through and looking for those and identifying which ones and how much are in the last 60 days. And that's kind of a pain when you got a 120-page 1099-B. Is that thoroughly confusing, Bob?
Yeah, you did a good job on that, Hal. Okay. So essentially, let's just summarize this real quickly. When we look at this particular one, we can't say, okay, we have a realized gain of $25,000 on this deal, hence we're going to be paying taxes on the $25K, and that's all we worry about.
Right. You've got to look into the $63,000 a wash sale that was disallowed and determine how much of that did you put onto other stock that was then sold before the end of the year that now you can take as offset to that $25,000 of gain.
Because I can tell you right now, if you take the gross proceeds, which will show the totals on the sales, and you take the cost basis and you look at that, you've got a substantial loss. All right? But in reality, you don't. So, guys, I know what Hal's saying here. I understand it, sort of, kind of. Okay, wash sales are something that you're going to have somebody that's going to be able to professionally help you with that if you can't figure it out on your own. Okay, my advice to you, my suggestion to you is that if you can't figure it out on your own, go get some help. This report that you get from here, which can be anywhere from a few pages to 120 pages, depending upon how many transactions you were playing with, you're going to want to present to your tax professional. That is going to be important, all right? Because if you're going to reduce your taxes and doing this, you need to do it right. Go ahead, Al. So
a suggestion I'd have is I would get this in Excel format. Most brokerages they have it where you can download it into Excel, because it would be a lot easier to go through it in Excel and identify the ones that you can claim the loss than trying to do it on paper and jotting it out that way. So that's just my suggestion.
Okay. All right.
So what you've got here, if you take the proceeds less cost basis, you got a $37,000 loss. If you take the wash sale disallowed and combine that with the gain, that equals the $37,000 loss. It's just when you have to gross it out or pull out the wash sales, you got a $63,000 loss and about a $26,000 gain. So that's what you got to do on there.